Good morning. It's the 19th of July. We are Signal Centre Talking Ball. I'm Joe Neighbour, all by myself today. Steve's off on annual holiday for the next week, so it will just be me running through some charts and latest news affecting all things markets. So it's Monday morning. It's Freedom Day in the UK, or so-called Freedom Day, where all restrictions that have previously been imposed are now lifted. However, there has been sharp levels of rising COVID-19 cases, so we're certainly nowhere near turning back to normal, but we are taking the next step. According to numbers last week, a record 520,000 people in England were pinged by the National Health Service via the COVID-19 app and told to self-isolate. So, huge numbers, but hopefully if we all act sensibly, then we can have a crack at this freedom lark and get back to some sort of normality. In terms of markets, quite a bit of volatility around this morning, and there was on Friday as well into the Asian session overnight. In terms of oil, we've had crude prices fall after the OPEC group and its allies struck a deal to inject more oil into the recovering global economy, overcoming an internal split that threatened the cartel's control of the market. So we'll come on to some oil charts shortly. In terms of what's going on with Germany, obviously there's been some catastrophic floods going on over there and into parts of Belgium as well. Now 200 dead, sadly, and this has had quite a significant impact on the dynamics of the upcoming election. So the Conservatives were very much ahead, but the Greens have come roaring back because obviously climate change is being blamed for these latest floods. So we'll wait and see what happens there. In terms of what's going on in the UK, homeowners gained more than £21,000 of wealth on average over the last 6 months after a buying frenzy triggered a temporary tax cut and rising consumer confidence. According to the property portal Rightmove, it said that asking prices for properties rose 0.7% in July, which was the biggest increase for this time of year since 2007. And demand is expected to remain strong despite the phasing out of the stamp duty holiday. Onto markets then. So off to a pretty tough start, as we'll come on to, but I'm going to start with dollar index today. Just a very brief run through on the daily charts on some of these markets. So looking pretty good on the dollar index side of things. 3 consecutive days of gains, including today, which obviously hasn't finished yet, but we are homing in on this level at 93.02, which is a resistance I've got, which was created back here on the 5th of April when a gap lower in the market has left an unfilled gap on the chart. So that is the very short-term target. If we get above that, without any sort of hiccups, then we're looking for this 93.43 level, which will then confirm a nice double bottom pattern, which we've spoken about on a couple of occasions. And just to sort of refresh your memory on what I'm thinking here, just bring up this weekly chart. So as you can see here, we've got 2 bottoms. We've got the neckline of the double bottom here in the blue. If that's broken, then we can start looking for a measured move target by taking the low of the double bottom to the neckline, projecting it higher, and that comes in at around about 97.66. So pretty bullish for dollar index if that does indeed break up. And just going by something I read this morning, dollar bears are becoming an endangered species, at least in the futures markets, because the aggregate net short positions versus major peers shrunk to under 2 billion last week, which is the lowest since March 2020. So, there's been a hell of a lot of short covering, which has seen this move higher. And I imagine there's a few beaten up balls left to capitulate, and maybe that'll be in and around this zone here at 93.43. So we'll continue to watch that over the coming days. Looking across the board at other markets, this is quite interesting. Aussie yen, as I spoke about last week, yen was on a bit of a charge as a safe haven, and it looks as though we've completed a really large top pattern on this daily chart for Aussie yen, and it's breaking down key support levels here, new lows this morning, and not looking very nice at all from a technical perspective. I've got a measured move target of 79.16 on this one, and it looks to be sort of arrowing in on that at the moment. So looking to sell into strength with that one, as I have been with anything really linked to yen. Euro yen, another case of that, breaking new lows today, breaking through support, and not looking too healthy at all. Sterling yen, big top pattern in the process of forming here. We need to take out this swing low that we posted on the 8th of July. If that happens, then we'll be looking for lower prices and looking to sell into rallies. Let's look at dollar yen. That's broken this trend line, but it's sort of holding in and around this support zone at the moment at 109.53. If that gives way, then I think we can look for lower prices. But for now, that is holding on. So maybe some sideways price action in the very short term. So that's just a really quick fly through on FX. In fact, I didn't look at euro dollar, so let's just quickly get that up. Big head and shoulders top pattern in the process of forming here. Big level of support that has been found here at 117.81. So if that breaks on a closing basis, we have our completed head and shoulders top, and then we can start looking for lower prices. It hasn't completed it yet, so it is on the verge. And I guess, what we're also looking for is this breakout to complete on dollar index as well, the double bottom pattern. So watching and waiting for now. Cable. Let's have a look at this. Again, another top pattern potentially forming here, looking quite sinister. We've got a big level of support here at 136.70. If that breaks, then we can start targeting levels as low as 130.97, which is a measurement of this high here to the neckline of this, what I'm going to call a double top, because we've got a top here and a top here, which if we break, we'll be looking for prices down here. So not looking good for sterling either, although, not quite broken the level. So watching and waiting, but certainly things are happening. So let's jump on to oil very quickly. We've seen a break of trend here. Obviously, the prices have been gradually grinding higher while this OPEC deal was waiting to be concluded. We now have a resolution, so maybe it's been a case of buy the rumours, sell the fact. This was pushing, obviously, higher with the rumours that there would be no deal struck, which there now has. And now we're looking for potentially a corrective move lower. I've got support down here at 66.43. I think that would be quite a healthy pullback given how sharp the move higher has been without any check back. So looking for a pullback maybe towards that kind of level, but I expect prices to be quite choppy, I think, in the short term there. Looking at gold. So this is the daily chart, remains within this bearish channel, which Steve has been quite vocal that he believes is probably some sort of flag pattern. If you look at it from a more zoomed out approach, I don't disagree with that, but in the short term, it doesn't look to be going really anywhere too far. So we've got resistance here at 1844. Maybe some opportunities to sell it in the short term, but if it breaks above that, then I expect it to challenge the upper end of this channel. Limited opportunities maybe on that one in the very short term, but we'll see. Let's have a quick look at Bitcoin. Looking at everywhere else, the volatility has picked up, but with Bitcoin, it's sort of not really a lot going on. Really, sort of sideways price action. We've got a big support around here at 30,000, which it seems to be sort of bumbling around. No real change in the outlook. Still quite bearish overall, but this 30,000 level does appear to be doing a reasonable job. So that might be a line in the sand for now with Bitcoin. And while it's above that, there is scope for a bit of a bounce. Looking at the indices now, where really the action is today, FTSE's off by 1% at the moment. So long term, obviously it's been going really nicely, but in the more sort of shorter term, we've seen some sort of rounding price action take shape, you could argue. And things are potentially starting to break down a bit here. So we've broken through this swing low that we posted on the 21st of June. We haven't done it on a closing basis, so we need to keep an eye on how prices close later today. But this is a negative sign, I'd say, if we do close below this level, and could lead to a continuation to the downside in the short term. If we look at DAX, again, it seems to have stalled into this sort of big resistance level here at 15,800. And we are threatening to take out some of these swing lows that we posted in recent sessions. So a tightish sort of range. Got support of 15,278. If that breaks, then we could see lower prices in a sort of temporary correction lower. And it's quite similar with the US markets, really. Quite interesting on the NASDAQ. This is the daily chart. It did push to new all-time highs last week, but we have seen a short-term break of trend, which could lead to a corrective move lower in the very short term. So it's looking a bit ugly on some of the indices. The US hasn't quite woken up yet in line with the European markets, but all looking a little bit stressed, I think, at the minute. So we'll have to wait and see how things play out from here. But just a bit of a A quick run through on these charts today. Obviously, I haven't got Steve around to help me go through everything, and I don't want to keep this too long. So I'll wrap it up there on the chart side of things. So going over to the gun to the head challenge that Steve and I participate in every day, we effectively make a call live on the show and see how it plays out between now and 9 p.m. tonight. So on Friday, I went short of Aussie Yen for the second consecutive day, and for the second consecutive day, got a nice winner out of that, 1.86R or 41 ticks. As you can see, there's been quite a yen theme with my trades of late, and that's seen a nice bit of upside as well. So quite happy with that. Steve was unfortunately stopped out on the footsie. Quite a tight stop as usual that Steve opts for, and had he just had it a little bit wider, he could have made a really nice return there. But that's the game, I guess. So what am I going to do today? Well, if you were to put a gun to my head right now and ask me what to trade, I'm not entirely sure, but let's have a quick flick through some charts to see if anything stands out. There was something that I did do a bit of drawing on prior to coming on online. Where is it? Was it Euro Sterling? Yeah, it was Euro Sterling. So this was what I was looking at, because just on an intraday basis from this recent sort of swing move, there was a 78.6% Fibonacci level at 85.93 that seems to have done a decent job. We sort of rallied into that and failed. So for me, that was going to be my trade of the day, and I was going to sell at 85.86 with a stop loss at 86.08, targeting a move down to these swing lows at 85.03. Just in general, it's quite range bound. It's not really offering much technically. There's certainly stronger trends around, but this was what I was going for today. So selling Euro Sterling. Obviously no Steve, so just be one trade today, and hopefully that pays out. Okay, so what we're looking at today, really light on the calendar actually, so nothing notable there. Traders will be looking ahead to Thursday's ECB meeting and also Friday's PMI releases for the real action this week. Earnings season is underway, so there will be a number of companies reporting. Certainly there'll be a lot of interest around the tech companies. We've got the IBM today, which is the biggest of the names reporting. And also there was some news out from the Treasury Secretary Janet Yellen. She's putting together a working group to discuss stablecoins. So that could be quite good news for the crypto world, in that they are obviously having conversations about them and talking about plans to maybe integrate them at some point in the future. Okay, so that's pretty much it from me. Nice, short, sharp start to the week. I'll be back tomorrow morning, and until then, trade safe, everybody. Thanks. Bye.